So for the gold market, we had massive increases in inflows in ETFs from March all the way through to the late summer. That's lost momentum. We've seen some outflows, and possibly some of that has gone into Bitcoin. Who knows? But the reality is, with vaccines and normalization, that's not particularly supportive of gold, other than the fact that there's so much other stuff that still is supportive of gold. So we've got $17 trillion in negative yielding assets around the world. No sight in terms of really rapidly rising interest rates. In fact, negative real rates should still be around, a weaker dollar, and still uncertainties. So we still see some support for gold going into next year in 2020, not as strong as what we've seen already, but we still remain moderately bullish on the gold market into next year.
Well, 2020 has got the pandemic written all over it. It's obviously created havoc at the beginning of the year and also here at the end of the year. And what it really meant was we saw another round of massive amount of stimulus. We saw rate cuts from central bank, almost coordinated rate cuts around the world. And we also started to see a weaker dollar. All these basically supported the price of gold, especially during the first half. As we move closer to the end of 2020 and the approaching of the vaccine to cure the virus, we start to see some fading appetite for gold. So we're finishing the year on a little bit of a cautious note. But heading into 2021, we still believe that there are plenty of drivers that could take the market higher. As we start 2021, the focus will clearly be on the vaccine and how quickly it can be rolled out, and therefore also how quickly we can start to return to some kind of a normality. So we see the risk being twofold, and both risks basically being beneficial for gold. We see the dollar continuing to weakening as we move into 2021, but also we can already now see in some of the other commodity markets that we are seeing emerging price pressure starting to materialize. And that the reflation trade, i.e. the risk of higher inflation, combined with the fact that the US central bank is probably going to try to cap the upside in US yields, i.e. some kind of a yield curve control. If that happens and we start to see rising inflation, then real yields will go deeper into negative territory. That will be supportive for gold. So while we finish 2020 on a little bit of a caution note, I still believe we can see 2,000 again and higher in 2021 for gold.